Over to you, sir.
Thanks so much. And I'm really sorry about that. We were working on the presentation this morning and we only got it sent through and didn't manage to get you on time. So what I'm going to talk about is the Kwanza Basin. And for those of you who've watched exploration over the last decade or so, you will know that the Kwanza Basin was quite an exciting place. A lot of wells were drilled and a lot of gas was discovered and presents a series of potential issues. And so what Ishmini and I are going to try and talk you through today is some of the potential options to make the Kwanza Basin a place where guys will enter in the future and monetize some of that gas. So I've got another panel that starts at 11 o'clock, so I'm going to do my section of this and then I'm going to run, so I apologize for that too. And let's get going. This is the outline. We're going to talk a little bit about the Kwanza Basin, the discovered resources, and we're going to place that into context, in a global context. We'll talk about where we stand now in terms of those resources. We'll look at some of the key drivers. Then we'll look at company strategies and fiscal attractiveness. That's an important thing in establishing a market and those developments in the Kwanza. And then we'll look at some of the potential development options, and we'll get into some key takeaways. So I'm going to go through about the first 3 points, and then Ishmini is going to take the rest. The first thing to consider is that the Kwanza Basin in the last decade has delivered in the top 20, has been in the top 20 basins in terms of resources discovered in the last decade. The Kwanza Basin has delivered more than the Niger Delta. In fact, if you look at the Kwanza Basin as a whole, which its offshore exploration really gets going in about 2011, the Kwanza Basin is comparable in resources discovered to date to that of the Southwest African Coastal Basin, or Orange Sub-Basin, that everyone's so excited about. There is a key difference. The key difference relates to the green and the orange on those pie charts. So on this slide, what I wanted to show you very quickly is essentially Angola in the last 2 decades has been a tale of 2 basins. It's been the Congo Fan and it's been the Kwanza Basin. And so around the mid-90s, the Congo Fan really exploded. A lot of wells were drilled. Lots and lots of resources was discovered within the Congo Fan. But those discoveries, although they were still prolific, were getting smaller and smaller and smaller. And towards 2008, 2009, there was a lot of excitement building for the Kwanza Basin because of the excitement that was taking place in the Santos and Campos. 2011, we start seeing an explosion of exploration. Maersk makes a discovery. Then Cobalt followed those discoveries one after another. And then we move into sort of the latter part of 2015, 2016. There's a couple of things to consider over here. 2014, 2015 was a critical time in our industry when there was a massive oil price crash. Everybody pulled back on exploration, and the Kwanza Basin goes dead. We've got this ramp up in resource discovered, but a flat patch from 2016 all the way through 2023, when Total drills the Grenadier well and makes another discovery. So in terms of actual success ratio and resources added per well, the Kwanza Basin was very, very successful. Unfortunately, as you'll look at that little pie chart on the right over there, the majority of the resource discovered was gas. And there are a couple of reasons that this gas wasn't monetized. Well, primarily the main reason being is no one was looking for gas. And that's something that is relatively universal. no one goes exploring specifically for gas unless there is infrastructure in place. If there's infrastructure in place, there's a way to monetize that gas. If there isn't infrastructure in place, we don't tend to look for gas. Another aspect was that there wasn't gas legislation in place between 2010 and 2016. So a lot of the resources discovered over there wasn't certainty what could be done. And then, and essentially, so you didn't have that certainty. You don't have a market, you don't have certainty. Almost all of the operators that were there exited the Kwanza Basin. And what we're left with is essentially Sonangol and Cobalt that were operating Block 20, which was 2021, was merged into Block 2011. And then Total enters. And so that's been essentially the single bright spark in the Kwanza Basin in the last 2 decades, one would be able to say. And we expect first liquids production, that's important, from the Camino development in 2028. So where does this leave us? Where does this leave us? How do we move forward in terms of actually getting some of that gas monetized? Well, we put together four ideas over here, and I'll try and talk you through those. But perhaps I'll start at the top. Perhaps the first thing that government can do is to improve the terms. And we've seen government improving terms all over the place. So we've seen Exxon get remarkably good terms in the Namib Basin. We've seen government extend production licenses. We've seen government award exploration licenses with significantly enhanced, improved terms. The next thing is the market, and I'll talk about this a little bit in more detail in the next slide or two. But one of the issues with gas is that the market is very tight post 2030. So the international market, the global market for LNG is going to be oversupplied, which makes it hard to take FID on projects now. The other issue is there isn't really a domestic market. It's one of the opportunities, but it's also one of the issues. You don't currently have a domestic market for gas in Angola. And in fact, while you could argue, yes, there's plenty of people without power and all the rest of it, there's no infrastructure to transport that power to those people essentially now. Infrastructure is absent, essentially. So we have the whole Kwanza Basin, a long way from anywhere where you could potentially monetize that gas. And what you need to do is, you either need to put the infrastructure in place to monetize the gas, or you need to come up with a scenario where you can justify the implementation of new infrastructure and create that market. Another thing to look at is the strategy which IOCs have towards gas. And Ishmini will talk to that a little bit, but there's a divergent strategy. There are some IOCs that are more focused on gas and others that are focused on liquids. But what that provides is, for those that are focused on gas, a potential opportunity. And that's a place to focus on in terms of bringing in investment for that gas. What I wanted to talk through over here was essentially just showing with the chart how government has already worked to improve the attractiveness in Angola. So 2017, Angola's production was already in decline and had been in decline for some time. The AMPG and government worked really hard to implement a series of reforms, and have done very, very well in terms of allowing or introducing marginal fields terms, promoting improved fiscals for developments, etc. And fundamentally, we've got to the point now where Angola, in this group of West African producers, was the second worst place to enter, or the second worst most difficult place to enter. And now we perceive it as, out of this group of producers, as the most attractive place to enter. So government's done a really good job of improving that overall environment, and we expect that to continue into the future. This is what I wanted to talk about in terms of the overall gas market. This is an issue. This is probably the biggest issue with monetizing gas, is our forecast and many others predict that in the late 2030s, the demand is going to peak. And in addition to demand peaking, global LNG capacity is ramping up quickly. I mean, we're already producing 480 million tons a year. We have another 170 million tons per annum under construction today. That's 35% increase in overall gas. And there's another 630 million tons per annum that is waiting to be developed or pre-FID. So essentially the point is that only the very, 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 very best projects are going to make it to fruition. And currently, for the gas in the Kwanza Basin, there's no monetization route. So we need to think about that when we look at that. Oh, and I'm going to hand over to Ishmini to carry on.
Thank you, Justin. Good luck. So I will take over from Justin and talk a bit about company strategies and on this slide. So over the past 2 years, we are tracking what do companies announce in terms of what they're planning for the future, what is their view on the future oil outlook, gas outlook, and what are their plans in terms of future investment. We have seen announcements from companies stating specific numbers in terms of how much gas they would like in their portfolio in the future. I would say that there is different approaches. Some companies are very specific about how much of their portfolio they want to be in gas, and the main driver for this is a reduction of the emissions intensity of their portfolio. Some other companies haven't really put any specific targets out there, and some others they don't really seem to let's say prioritize gas investments. That was until almost a year ago. Over the past year, with a more pragmatic approach relative to energy transition, companies are reshuffling and they're revisiting their plans. So that is creating an additional pressure and potentially uncertainty in the gas market globally, which on top of the tight conditions in terms of demand and supply, could potentially make the next few years in terms of new gas investments at the global level a bit more challenging. And this is where we think that the domestic market and the regional market becomes even more important and key for the development of the Kwanza Basin. Then we are also tracking the criteria that IOCs take into account when it comes to making new FID decisions. Apart from the traditional criteria relative to profitability, after-tax break-even, cost per barrel, one parameter that has been relatively recently added to these criteria is the greenhouse gas emissions intensity. Companies like Total or Shell have made it very clear that they are not planning to take FID on projects which will contribute to an increase in the emissions intensity of their portfolio. So what we believe is this is a good reason, it creates an opportunity for gas projects and new gas investment. However, I think again that considering the limited capex available and the potential tight gas market, the window for these developments to receive investment might also be narrow. So in that case, again, I would expect that the big projects, the very profitable, the very variable one, would easily take FID and receive funding. The ones that would be smaller and maybe not that viable in terms of the economics, for this project, it would be difficult to compete at a global level. What I've done here is that I extracted from our databases some of the most important oil and gas projects in Africa. The purple bars are the emissions. So on the left-hand side, we have a chart with the oil projects. On the right-hand side, we have a chart with the gas projects. The orange bars is the emissions intensity, and the blue lines is the NPV, the net present value. The distinct difference between the two slides is the emissions intensity. We can see that the average emissions intensity of the oil projects is just below 40 kilogram of CO2 per BOE, while for the gas projects, the equivalent value is around 16 or 17. The main reason that the oil projects have high emissions intensity is two things. The production of the liquids itself as a process. It requires the use of facilities that push the emissions intensity of the project up, but at the same time, the lack of infrastructure forces the operators to either flare or inject the gas. And that is a main contributor at the emissions intensity of the project. So again, here you can see another way where we can look at the projects and say gas projects are definitely more likely to get funding, and they are more competitive against oil projects. The other element that will play a key role in terms of the new FIDs is the fiscal attractiveness. On this chart, you can see a comparison of the fiscal terms for gas of various countries. Starting up from the top, we're looking at Nigeria and the attractiveness after the recently revised PIA terms. So Nigeria made bold moves to become more attractive from an investment perspective, and they have increased a lot the potential value of the project with their new terms. Then we have Namibia, who we know has attracted a lot of investment over the past 3 years. We know of all the big discoveries that have been made within the Orange Sub-Basin, and we have also included in our analysis some of the other peers. What we can see at the bottom with Angola and the orange-red bar is that Angola, although still comparable, is probably still lacking in terms of fiscal attractiveness. However, the good news there is that we know that on the oil side, the government has been very open and flexible to negotiate improved terms as long as they can get investment in the country. So we believe that a similar approach for gas projects is definitely the way ahead. Then another thing that we looked at is the potential of the Kwanza Basin. We currently know that the country is producing approximately 800 million scf per day through their existing LNG facility. We are expecting by the end of the year the new Sana Lingas project from Chevron to come on stream, and we are also expecting by 2026, 2027 the Northern Gas Complex by Azul and other partners to come on stream. This will maximize the capacity of the existing LNG capacity within the country. Then, if we add on top of this some of the big discoveries of the Kwanza Basin, what we see is that taking into account the Katambi development, which we think is the most likely to come on stream the soonest, and then the Camino gas development, which we think would be a reasonable follow-up project to the existing liquids production project, we can see that the country can also add approximately half a BCF every day in their total gas production. Then, looking at the other discoveries in the Kwanza Basin, we can see that there is a potential to late in 2030, of course, depending on the timings of the project, we can see that there is a potential of reaching production rates up to 1.5 or even 2 BCF per day. So definitely a very positive outlook for the country in terms of gas, and the potential to make the country a big player in Africa in the gas market. So looking a bit at the geography, we were trying, considering the lack of infrastructure that Justin talked about earlier, we were trying to figure out what could be the potential export routes be. So one thing that we know for sure is that there will be an FPSO at the Camino development by 2028. So that means that we were looking at potential options between Camino and Katambi, and we think that a reasonable export route would be somewhere in the middle for a terminal development. That makes that creates a tieback distance of 180 kilometers, which means that it's like a tieback distance which is reasonable to operate with relatively low risk, no big challenges. The other option that could be considered is an export of the gas from the Camino development up to the Congo Fan through the existing pipelines that are already in this basin and are exporting gas to the LNG facility. However, something that should be taken into account is the deep water operational environment and the aging infrastructure that we already have into the mature area of the country. And then what did we do? We decided to run some economics. We started off by trying to evaluate the development of the Katambi field. So we looked at the various development concepts. What we believe, based on the nature of the project, is that an FPSO would be the most reasonable option to be installed there. Looking at the total cost of the investment, we are estimating that potentially we're looking at an investment between at around like 5 billion. Half of this cost we expect it to be drilling costs. We're talking about the deep water environment, and 1/4 of the total capex is expected to be for the FPSO facility. The rest will be subsea facilities and the pipelines. Running the economics with the current gas terms, at 3 different gas price scenarios, 4, 6, and 8, we can see that the results are mixed, depending on the gas price. To recover from this uncertainty, we think that a hub approach, so developing all the discoveries together through the same facility into the basin, would be the most feasible scenario. Then some key takeaways. So what we understand for Angola and from the study we did is that Angola is already a big gas producer. However, significant potential remains, and this is definitely an opportunity to be looked into. The global gas market is tight. However, this is the time and the opportunity for a domestic and regional gas market to be developed. It can help with the improving access to energy of the population and with the industrialization of the region. Very positive moves from the government themselves on the oil side can go a long way, also making the country more attractive for the gas development. And finally, infrastructure will be key in terms of this development. There is always a discussion around, is it the infrastructure that is making the gas discoveries viable or the opposite? But this is definitely a discussion that needs to be had. That's it from me. Thank you.
All right. Thank you so much, Ismini.